Hello everyone, this is Dan Gramza, and on behalf of the CME Group, welcome to Advanced Gramza Market Studies for Wednesday, March 4th. G7 came together and they said we're going to do what it takes to support the market. Now, the RBA down in Australia did lower rates to 0.5. The market was a bit disappointed with the G7 because they didn't come out with specific things that they were going to do, but I'm not sure how much they could have said at that point anyways, really. And the Fed, they also lowered their rate 0.5% or 50 basis points. Now, you can see the shadows on the top. So the markets did rally for a bit, but the weakness still came right back into it. Let's talk about some of the issues here. And we mentioned it day before, but when you cut the rates, like we've seen, what does that do? It eases debt service cost. It lowers cost of loans for expansion. But it doesn't solve cash flow problems. Now, the central bank in China said if you have customers to the banks, if you have customers with late loan payments, do not impose penalties because they recognize the fact that this can happen. In other words, it's a multi-layer issue, and the central bank can only do so much. So this cash flow issue still is present in the market. If I can't get the goods to increase my production, something has to change. And it's like, we talked about Honda decreasing production in Japan because it can't get the parts from China. So it's not an easy situation to take care of. Plus, a lot of this is anticipating issues, anticipating the possibility of certain things happening. But let's talk about structure. What you're seeing here in the S&P, this is a typical profit-taking type structure. It actually does imply another move to the downside. Notice the benchmark candle. We didn't close above it. Same thing over here. Benchmark candle in the NASDAQ market still stays dominant. And down here in the Dow, here's your benchmark candle, and we failed to get a close beyond it. You see the same thing here. There's your benchmark candle in the Russell. So this implies another leg down. And if that's going to happen, then the next 2 to 3 sessions are very important. In other words, ideally, you want to be closing below this low in the S&P in the next 3 sessions. Same thing here with the NASDAQ and down here in the Dow and over here in the Russell. But what do you think is going to happen? Well, excuse me. I think it depends on how Asia begins. If Asia starts out and goes weak, that could be the high of the day. I would look for Europe to follow suit, and same thing for the U.S. But let's review some of these areas now. The S&P bearish level there remains at 2950. Over in the NASDAQ market, bearish level there in that market is at 8,400. And if we go down here to the Dow, the bearish level there is 25,600. And in the Russell, well, we traded above its bullish level. And the magnitude change here in that market, $6,250 a contract. The next bearish level, and that's somewhat aggressive, is at 1450. Well, what about the currencies? The euro, I thought was actually going to continue weaker. You can see a shadow here. It was weak for a while, but it pulled back a bit to my surprise. The bearish level here actually is now at 110.80. The Swissy, this is not a real strong move to the upside. Look at these shadows on the top. They've been selling into this, but it's been resilient. Is that going to hold? The bearish level for that market, 104.25. Japanese yen traded below its bearish level. Magnitude change, $3,025 a contract. 93.70 is the next bullish level. And I'm looking for an inside day here. I don't look for strong follows to at this point for that market. Down here in the Aussie dollar, the bearish level there is now at 65.60. That's been tightened up a bit. So we'll see if it holds its own. This is more of a neutral position for the market. And the British pound. Bullish level there, well, that's now at 128.80. And over in the Canadian dollar, bearish level in that market is at 74.50. I'm looking for a market to move lower, but not by much. So, the currencies. Dollar implies it could get stronger. These currencies could get weaker, so we want to be guarded on the long side. Bitcoin bullish level remains the same, and that's at 9,100. I'm not looking for a big drop down or a rally. I still think it's neutral in terms of structure. Now let's talk about interest rates. Well, the short end of the curve traded just a bit below that bearish level. No follow through to the downside. Magnitude change here, to give you that as a reference, is $1,050. 99.05 is the next bullish level, and I'm looking for it to trade between 90 even and 99 even down to 98.90. The 10-year notes did give us that rally. It also traded below its bearish level. Magnitude change here in that market, $1,687.50. 136.16 is the next bullish level, and I'm looking for an inside day in that market. 16 to 12 is that kind of range. Over in bonds, it also traded below its bearish level, and then boom, off it goes to the upside. But the interest rate reaction here does make sense. Magnitude change here in that market, $7,375 a contract. Next bullish level, 175 even. Wow, just amazing. We're seeing levels at this height. I'm looking for 174 to 172, an inside type day. I don't look for strong follow through. Gold also firmed up a bit. How about that? Bearish level here now has been raised to 1620 in that market. I'm looking for a day between 1635 and 1655. Silver also perked up a bit, traded above its bullish level, and the magnitude change there, $7,250 a contract. Next bearish level is at 17 even, and I'm looking for 1710 to 1740. Well, copper. This makes more sense. Copper cooled off a bit, as it should. 255 is the bearish level. 258 is the bullish level, and I'm looking for 259 to 256. Well, crude oil. Crude oil made new highs and it's backed off. Now we have OPEC Plus meeting this week. They are talking about production cuts, but if you look at statistics on supply, it's still a lot of crude oil. And them cutting back on production, could that increase prices? Well, possibly, but you need demand to drive those prices. Right now, I just don't think we have enough demand to soak up the amount of supply we have out there. I am not confident on follow through. 46 even is the bearish level, and I think we could hit that on Wednesday. Nat gas did try to firm up a bit. This is not a sign of real strong strength unless tomorrow we close above 187. I don't see that happening. I'm looking for 183 down to 177 as its target range, and 174 is the bearish level. In the grains, soybeans stopped and took a breath, no problemo, but we need follow through media. If we don't get above 910 on Wednesday, look for a sideways move to continue. Potential downside is 897. Over in corn, it did perk up a little bit. 377 is now its bearish level. 380 to 384 is expected range. Wheat also traded above its bullish level. This is $1,200 a contract is that range. The bearish level 520, and we're looking for 532 to 526 as the potential range. Well, that concludes today's Advanced Market Studies. Thank you for being with me. Looking forward to being with you again tomorrow. And in the meantime, take care.